Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart as we do have a little bit of pullback. We are under 31,000 again. Guys, if we just jump straight to the charts, we can see that we are pumping off of the current 1 hour momentum pool. And so we are getting into a 4-9 squeeze with both pointed positive. That's the reason why I make this momentum pool, so you can kind of see that entry in advance. I have been posting the 1 hour charts in the group Discord. You can see the link in the description of this video below, and you would have gotten pretty good a heads up on what was going on the 1 hour. Now you can see as we push up here, if we are able to break out and then hold this general continuation or the add lose momentum line somewhere around 30,821, 30,830, then we may be able to push up to the neutral point of control, and that could get us into a squeeze with the 9 and the 21 on the hourly, which could take us perhaps up to the bullish control zone, somewhere back around our highs, somewhere around there at the 31,000-ish. Now, guys, that neutral point of control is at 30,905, and we will need to flip that on the hour in order to put bulls back into control, or at least give them the slight advantage. Until then, we have to be aware that we could have another smackdown, perhaps to our lows. And as long as we hold our lows, especially above 30,000, let's just say 600-ish, then we should be all right. Although I would prefer not to get into the bearish control zone under 30,735, and that could be possible because if I do put on our simple moving average, you can see that we do have a bit of an alpha 9 knockout going on here, which means, well, we already had a pretty nice pullback right there. But whenever we have an alpha 9 knockout, the reason for its name is that it often knocks us back down on our butts, guys. So we're just going to be aware that we could have a retest of the lows before actually breaking out of this wedge-like structure. If I do draw the rest of the wedge, you can see what I'm talking about here. And this is essentially coming off of a cup and handle. So you see the cup and the handle, and then we had the breakdown, and now we're creating this kind of wedge structure, which is actually a bullish falling wedge. And if we flip the breakout and hold that trend line, then we could just take off with a measured move, perhaps somewhere 31 to 31,200. Okay, guys, that's what I'm looking for, just based upon the hourly, and those are your key levels for the hourly, guys. Now let's go ahead and jump over to the 6 hour and see if we can get any a little bit longer term perspective on this. And the 6 hour is basically telling us a very similar story where, for the 6 hour, we can't drop below our lows. Otherwise, the bears are going to get the advantage on the chart here at 30,617. So thanks to the 6 hour, we can put a number on that. We did just enter the momentum pool after shifting our momentum from the downside to the upside. And that's usually a tradable play for me. And so I would have entered there at 30,771. If we check back to there, or we break back down and then re-enter at 30,771, I would take that long again, just because the first candle is often a fake out, and then we get the real move later on. So if we do re-enter the pool at 30,771, I would expect this to eventually squeeze us up to the add lose momentum here at the other side of the pool, somewhere around 30,969. Now if we do get above 30,974, that should flip our MACD blue, and then you know, those kind of standard traders are going to start getting a little bit excited, and that could carry us the rest of the way. You will notice that our volatility pivot is over our head on the 6-hour, and so if we don't flip 31,259, then this is likely to be just a mean reversion, just kind of a liquidity grab, kind of a fake out before we continue to drop. And this could end up being a bit of a double top if we get sent back to our lows, which then could take us to the bearish control zone somewhere around $30,000, guys. So there's both of the perspectives for you. But so far, looking all right, looking all right. You can see on the 6-hour, we haven't lost the 21 EMA, and we are pushing up into the 9 again. So if we flip the 9 right here at 30,850-ish, and then we grab this 4, which is just like a whisker above, somewhere around 30,880, that could actually set up a 9-4 squeeze to the upside. And so, you know, we got the 4 is the pink line, and then the red line is the 9 there. And so we do have this kind of just kind of, you know, janky squeeze between the 9 and the 21, just really fragile there. But if we do get into that 4 territory, I think I would be ready to call it as a bit of a reversal, or at least a mean reversion on this setup here, guys. So I am looking to the upside, maybe with a retest of the lows. And of course, we're going to mind that key level, the 30,600. We don't want to lose that. Guys, let's go ahead and jump over to the daily. Now, the daily has a very, very thin momentum pool today, so that's not tradable like the 6-hour is. The 6-hour and the 1-hour are the ones that have that kind of a play setup. But in case of the daily, it's just too razor thin. You can't even see it because it's so razor thin on this chart. And what we're going to be looking for here is essentially if we just hold it, okay? We just want to hold above 30,733, and we're going to be okay, all right? Preferably above 30,771, but again, they're just a whisker apart from each other. And so if we are able to hold that by the end of today, which is in 22 hours, then we do have a chance of just meandering our way back up to that volatility pivot on the day. And of course, the volatility pivot on the daily and the 6-hour are over our head. That suggests that random volatility in the market can just shoot us down, okay? So we could get slapped down until we conquer those volatility pivots on the 6-hour and the daily. But currently, we're putting in a little bit of work that shows that it might be possible. And I did show you that falling wedge that gives us a little bit of hopium that we can at least get up to that level to have a fighting chance. And of course, that volatility pivot is at $31,086. And then the Moon Boys are going to go crazy if we cross 31,159 on the day, because of course their MACD, their beloved MACD, is going to flip from red to blue there. Guys, bears don't gain the control of this chart until we lose $27,012. That's a long ways away, okay? So we have all the way down to 30,326 to actually stay in the bullish control zone. And you can see that by maintaining that level, we're not really going to initiate a squeeze on the 9 and the 21 on the daily here. Because we're going to be above the midline. And so basically the 21 could still have the opportunity to swoop us up. But should we lose the 30,326, we will cross the mid area of the 9 and the 21. That's going to point the 9 downwards. It's going to flatten out the 21, and that could set up a squeeze play to the downside on the EMAs, which could take us to our neutral point of control at 29 173, and then we can play it by ear from there. That's probably going to be part of a liquidity grab, and in fact, we could dip even lower and grab some more liquidity before taking off, and that would be a pretty classic move for Bitcoin, where maybe we do something like this, and then we come back down here, and then after taking that liquidity, we just rocket to outer space. I would be expecting this type of zigzag kind of fake out. I think a lot of guys call it like the power of three, right? The power of three, one, two, three, right? Rocket to outer space. But guys, this is just a pretty common kind of liquidity setup in charting, and this chart is bullish on the daily, so don't make any mistakes about it. The higher time frames are bullish, and if we have some pullback on the daily, then as long as it's not too long, we don't get embedded there too long. As long as we don't stress our EMAs on the 300 EMA down here at 25.9 or the 200 at 26.100, then this is probably just going to be a little bit of a bouncy territory, and it's probably just a buying opportunity. Like I said in previous episodes, strongly prefer to be above 29,000. But hey, a 28,000 isn't half bad if we do get a dip there eventually. Again, just a buying opportunity area. And it's just we want to be mindful that we don't really want to get embedded below 28. And definitely we don't want to get embedded below 27. Things could start to break. Guys, I think I'm going to leave it there. That's your alpha for the day. Hope that helped you understand. Again, guys, there's the link to the Discord in the description of the video below. It's your alpha. Stay safe and happy trading.